Welcome to this week's edition of Weigh the Options. Weigh the Options is a video series where I take a look at 5 potential options trades that I'm thinking about for this week. Weigh the Options is a members-only video series where these episodes are available to members of the channel immediately as they are published. For non-members of the channel, you guys unfortunately have to wait 1 week before these videos are publicly available. But please help support my work. Become a member of the channel. Click the join button. It's only $5 a month and you get immediate access to all of my content, including Weigh the Options. So let's jump into the trading platform and talk about some potential trades this week. Now, earnings trades this week, we're really kind of light on earnings as far as there's not a lot of good stuff to play this week. It's a lot of meme stocks, right? A lot of really high volatility plays like Rigetti, CoreWeave, Circle, OKLO. And I mentioned OKLO. OKLO's one I really don't ever play, but it has really good volatility. You can see the stock chart. This thing has gone from like $18 a share back in April to it traded as high as 193 and change. Right now it's trading at 111 and change. Just crazy volatility. If you go to the options chain, you can see that the December cycle has 120% implied volatility. The January cycle has 114% implied volatility. Really high vol. And because of that, a lot of times you would think, well, hell, go sell a strangle, right? Because that's what we love to do on volatile stocks. Sell strangles because you get twice the premium, right? You get the premium from the short put and the short call. It just makes sense. But I would never go sell a strangle on a stock that is essentially a meme stock. Anything that moves crazy like this, selling a strangle is just asking for trouble. For me, if I wanted to play this, I would be directional and I would treat it as a low probability lotto ticket kind of play. And what I'm thinking about for this reports earnings. What day does it report? After the bell tomorrow. So what I'm thinking is tomorrow, what I might do, let's go into the options chain for OKLO and go to the 4-day cycle. So we'll do the weekly play. And I'm going to bet on this thing going down because I don't believe this move was real, right? I think this thing has been pumped up way too high. So I'm going to do a expected move to the downside butterfly spread. So I'm going to go right to the expected move. I'm going to sell a put. And then I think I'm going to go, let's go about $8 wide. So I'll buy the 104 and then also buy the 88. And of course, these strikes may change by tomorrow afternoon when I put this on. And then of course, we need to double up the shorts. And then this is your long put butterfly. It's a long put butterfly because you're paying a debit. Anytime you pay a debit for something in options trading, that's a long trade. If you get a credit, that's a short trade. But it is a bearish trade, right? This long put butterfly, we want the stock to go down. If it trades into this range, we could make a nice little bit of profit. You can see I pay 121 for this butterfly. Max profit is 679. The odds of you making max profit are very low. You would have to hold this till expiration on Friday, and it would have to pin the 96 strike, a very unlikely event, but you very easily could make $200, $300, $400 on this butterfly spread if it settles inside this spread, especially late into the day on Friday this week. Now, it's a low probability trade. You can see pop is only 24%. The P50 number is about 40%. The P50 number, that's 50% of the debit we're going to pay. That's not a great number. That's 60 bucks. I'm not trying to take 60 bucks. I want at least a buck. That's the minimum. I'd really like 2 bucks. Realistically, though, it's a low probability trade. You can make it a higher probability trade by making the spread wider if you want, but then you're paying more, right? So, or if you want to make the spread smaller, take even less risk, I mean, I could go and make the spread $6 wide in this example. Now I only pay 54 cents for it, right? On a max profit, 546. But now you've made the spread $2 on each side smaller. So $4 you subtracted from the spread, right? So this is even lower probability trade. So you got to find the sweet spot, where you want to do this. I think $7 is actually a pretty good sweet spot. Let's go $7 on each side, 87 cents debit on a max profit of around $613. It's actually fluctuating wildly right now because the market is open and OKLO is moving around. But again, I would not put on this trade today on Monday because it reports after the bell on Tuesday. So I would put this trade on tomorrow afternoon right before earnings. Now let's talk about some other options trades, some non-earnings trades, because this week But there's a lot of opportunity because we saw a big sell-off in the market here in the last couple of weeks. If I take a look at the SPX chart, you can see we've sold off quite nicely into late Friday. We sold off hard, and then we rallied, and now that there's news of the government shutdown, it may be coming to an end. We're rallying even more today. But, still having sold off a little bit, I do think it's smart to go put on some bullish trades. So go sell some puts, right? Go sell some put credit spreads, some put ratio spreads. Go do whatever it is you can do to be both bullish as well as profiting from VIX, because the volatility has been pumped into the market. It's coming in a big way today, but you can see had a pretty good amount of volatility pumped into some stuff as well. So what I'm thinking about doing is one of the big chip stocks that's had a nice run up, Micron, MU. What I was thinking about doing in this was doing a bullish trade, and I wanted to put this on this morning, but I did not expect. This is one of those things, had I done this before I recorded the video, if I'd done this at market open, wow, this thing is up $17.50. That's a 7% move it just made in one day. So selling the put would have been a great trade. I don't know if I'd want to do it now. Let's go see. Let's go to the 67-day cycle. Still got good volatility, 74% volatility. I don't hate the idea of selling the 13 Delta put for $585 credit on a buying power reduction of $1,900. That's still really good. I know it's a high-flying stock, but there's momentum behind this thing. There's clearly some momentum, and you might just want to ride the wave. One way to ride the wave is to double dip. Sell the put, maybe also buy a call debit spread. So let's actually do a call debit spread. Let's go to the 36 Delta and then sell the call $10 above. So that's a $10 wide call debit spread. We would have to purchase that for $220 for a possible profit of $780. But because I would also sell the put to finance it, a put that's going to give me nearly $6 credit. Overall, I get $365 credit on the trade on a buying power reduction of $2,100. But now the max profit on the trade, should I win, max profit on both the short put and the call debit spread, is $1,300. So that's a great way. It's basically a double long, right? You're using a short put to finance the purchase of a call debit spread. And if you wanted to play this as a momentum trade, I don't think it's the craziest thing in the world. I've done plays like this, and I do believe that stocks, when they have momentum, it's the right way to play. I know a lot of people will see something like this and want to be a contrarian and actually get bearish on this. I hate that, right? That never works. I've never been able to make that work as far as calling tops or calling bottoms. For me, when I see something like this, it's just a runaway train in one direction. I think, yeah, you just have to play it to that direction, but be small, right? If this is too risky of a trade for you, then obviously you would pass on it. For me, though, I kind of like this. Another chip stock I was thinking about playing this week, but I bet it's also having a huge move, and it is, right? So in sympathy with Micron, maybe all the semiconductors are moving this morning. The market is up in a big way. Right now, the ES is up 75 points as we speak, but AMD had a really rough week last week, so I thought, hey, now's the time to go sell a put in it, right? Well, it's up $12.50. That's a 5% up move. So maybe selling a put in AMD, I mean, you could still do it, but maybe this time, especially if I was going to take the Micron trade, which is a really bullish trade, a double bullish trade, right? A double long, maybe I would do something to hedge my bets a little bit. So in this case with AMD, I wouldn't put on a bullish trade. I'd actually put on a neutral trade. Maybe sell the 12 Delta put, the 11 Delta call for $685 credit on a buying power reduction of $2,400. I love that trade. Really good risk reward, right? $2,400 buying power, but you get $700 credit. That's really good. And then the pop on such a wide strangle, 80%, but the P50 number is the one I want to look at because I manage my trades at 50% profit. 88, 89% probability of 50% on the trade. So yeah, all signs point to go on that. Another trade I was thinking about taking was maybe a post-earnings trade in something like Shopify. Shopify had earnings not too long ago and still has some IV rank, 23. It's not great, but it's still got some IV. IVX in the January cycle is 51%. Really good IVX. And then we had a nice little sell-off. So this one, yeah, this one makes sense. It's up kind of big today, but the market is up. But still, I think it had a nice little correction that just selling a 15 Delta put in this thing. Really wide bid-ask spread though on the 15 deltas. This is one of those things you got to be careful. I would either go to the 12 delta where the spread is a little tighter, or actually the 19 delta. Now it's only a 20-cent wide spread, so maybe sell the 19 delta put for a $4 credit on a buying power reduction of only $1,300. The pop on the trade, 79%. The P50 number, which is the one I really pay attention to, 90%. Again, for me, all signs point to go. If you wanted to sell the other side, you certainly could. IV rank's a little low. A lot of times I like higher IV rank to sell both sides of the trade. But if you want to be directional, and for me, I did want to be directional because I thought this was a little overdone and it's about to start making its way back up. And anytime you want to just sell a put, even if the IV rank is not quite what you want, which for me, I want a minimum of 30. But if you're just selling one side, so just selling the put or the call by itself and having some directionality to it, it's certainly acceptable to just sell the put here for $4 credit, buying power reduction, $1,300. I love this trade. And then the final trade I want to mention for this week is a trade I put on regularly, but I usually don't talk about it on these Weigh the Options episodes. This is one of my SPY put credit spread campaign trades. And the reason why I think it's a great time to put on one of these is because we had the sell-off. Now, obviously, we had a nice little up move today. A lot of times I like to do this on down days. We had an up move, but I think this up move will continue because as the news comes in about the government shutdown, because it's not official yet, we may see more rally in the market. So typically what I do is I go to the 60-day cycle or whichever cycle is closest, in this case 67 days. And then what I like to do is I like to sell the 35 delta put. In this case, the closest will come is either the 33 or the 37 delta. Let's do the 33 delta. And then size your put credit spread appropriately. If you got a small account, keep it $5 wide. So buy the put $5 below. You get a 108 credit. You're risking $392 on the trade. You've got a pop of 65%, but again, manage at 50%. That's very important. If you manage at 50%, this thing has a 90% chance of you winning 50% of max credit on the trade. So, I mean, that's fantastic. Right now, if you wanted to make this trade bigger, you can make it $10 wide. Now you've got 203 credit on a buying power reduction of 797. That's also your max loss, obviously, on a spread. But similar, pop 65%, P50 number 92%. The wider you make it, the numbers may change slightly, but they shouldn't change too much because the main driving force behind this spread, of course, is the short put, this 33 delta put. And in this example right here, you can see I made it $20 wide, 361 credit. Max loss $1,600. Again, P50 92%. So high probability trades. These are great. These have positive expectancy because the market, in this case the S&P 500, does tend to go up over time. So if you just sell put credit spreads on it over and over again, over time, you're practically guaranteed to come out ahead. Now, be careful, keep your size appropriate, but you know, anytime you get a nice little pullback in the market like we had recently, I think that's a great time to go put on these trades, maybe put on a bigger size than you typically would. Again, don't get too big, but you know, if you typically do like a $5 wide put credit spread after a really nice pullback, maybe you go put on a $10 wide put credit spread, as long as that's still acceptable for your account size. With defined risk trades, I don't ever want to risk more than, say, 1 to 3% of my net lick account value. So if you're trading with a 100K account, for example, now, I don't want a max possible loss on a put credit spread of more than $3,000 or less than $1,000. So that would be the 1 to 3%. So 1,000 is probably too small of a trade. 3,000 is getting to too big of a trade. I think $2,000 of a max loss is perfect. And that would be the perfect credit spread for a 100K account. In this case, what we did here with the $20 wide put credit spread example, I think is a perfectly acceptable trade for somebody with that sized account. So that's it for this week's edition of Weigh the Options. Remember, Weigh the Options, it's available immediately to members of the channel. Non-members have to wait 1 week before the video is publicly available. So please consider supporting my work and becoming a member of the channel. Click the join button below. It's only $5 a month. And again, it does help support what I do here on this channel. Peace, guys.